Good afternoon. Today we are going to present commodity outlook. Concerns about emerging markets continued. Poor earnings at Chinese giant Tencent set off a wave of worries about emerging markets. Tencent is the single biggest member of FTSE EM index, which reported its first drop in profits for at least a decade, sending its US listed shares down by 6.7%, the biggest one-day drop in 5 months, to the lowest level in a year. Focusing on lira, Turkey has slapped an additional tax on import of American goods. These tariffs include additional 50% tax on US rice, 140% on spirits, and 120% on cars. With that, Qatar has pledged to invest 15 billion in their economy. Due to this, lira has recovered significantly by touching a low of 5.7 per dollar in today's morning session after hitting a record low of 7.24 on Monday. US data were robust. US July retail sales rose to 0.5% compared to 0.1 expected. The headline showed surprisingly robust vehicle and parts sales despite in poor month for automakers, but that was balanced by some other quirks that placed the control group at expectations. The Empire Fed was strong at 25.6 compared to 20.0 expected in another positive sign of the US, but industrial production was tad soft at 0.1% versus 0.3%. Now let's have a look on specific commodities. Gold prices fell to a fresh 1.5-year low yesterday as broad strength in the dollar weighed on bullion. The US dollar index hit a 14-month high on worries about global currency market crisis developing that is keeping gains capped for the precious metal. We believe traders may continue their bearish bets in precious metal. Today, gold's support and resistance will be 29,370 and 29,550. Crude oil tumbled after data from EIA, which showed larger than expected 6.81 million barrels buildup in US crude inventory. Still, sentiment in oil markets were broadly cautious due to rise in US crude production and storage level and weakness in emerging economies, especially in Asia. Today, crude may see some recovery if it breaches the level of 46.40. Today, we have natural gas storage data. We believe EIA weekly storage report is expected to show a buildup in supplies of 30 to 31 BCF. It was hotter than normal over most of the country, apart of portions of the Rockies Plain and South. Today, natural gas support resistance will be 205.2 and 208.9. Base metals saw a major crackdown, with copper was down 4%, falling towards one-year low. Zinc slumped as much as 5.3%. Copper prices tumbled on news that strike at Escodia could be averted, keeping investors focused on supply-demand part of market, and zinc prices cracked due to some large rise in stock stored in LME warehouses. We believe today base metals continue to see some breakdowns on their daily charts. For today, we have initial jobless claims data and Philadelphia Fed Manufacturing Index in the evening around 6. That's it for today. We hope this video would have been informative and happy trading.